to the floor show. Joining me now live, Interactive Brokers Chief Strategist Steve Sosnick. Am I right? Elon Musk, Tesla, one of the most widely and actively traded stocks?
Absolutely. At our platform, it's been perpetual #1 in terms of activity for years. It was Tesla and Nvidia for a while. Now it's clearly Tesla again. Basically, this stock has earned it's earned the respect and it's earned the love from all kinds of investors. If you were an early investor, you made a fortune, and they're very loyal to him.
Past 24 hours, what is the action looking like on Interactive Brokers?
It's hard to say because I'm not able to see it in real time. Just that's something that kind of keeps me in the dark a little bit, and so that I can't reveal what our customers are doing with too much granularity. Over the past week, it was the most purchased name at Interactive Brokers. So I have a feeling a lot of customers are licking their wounds a little bit today. And one of the things I'm seeing also as a result of Tesla is it's a weird it's not a sector, but it is. A lot of other highly speculative momentum stocks are getting hit as well today. Things like Palantir, things like CoreWeave, stuff that sort of moves alongside Tesla and other speculative tech names. Also, Bitcoin, to some extent, moves in that group to a level. Yesterday,
Strategy, formerly known as MicroStrategy, was the hottest name on the NASDAQ. It was jumping more than 6%. Today, it is doing the exact reverse. So maybe that's exactly what you're discussing when it comes to the Bitcoin names.
It does, because, well, Strategy is really at this point a leverage play on Bitcoin. Anytime you buy a company that uses debt, there's inherent leverage. So it's a leverage play. They are a Bitcoin holding company that gives you the leverage. And then, of course, for many people, there's 2x leverage MicroStrategy stock, which people love just because if you like the volatility, there are people who double down on it. But you're seeing there's a sort of a speculative cadre. And I think today you really see it in how the markets are breaking down, with NASDAQ lower across a lot of tech stocks. And meanwhile, the S&P is floundering, and the Dow is higher.
Isn't that interesting? The Dow is not just higher; it's up 439 points. If you look at the Dow heat map, Amgen all the way at the top. Nice gain there. We've got United Health Group, which was the worst performer in the first half, I believe, or at least certainly the second quarter. Sherwin-Williams, Nike having a great day, but you're seeing a little bit of a split here when it comes to, let's just say, the NASDAQ and the Dow. I mean, the S&P down a couple of points here, but what do you foresee for the third quarter?
Well, first of all, what we're seeing today is almost an unwinding of the window dressing that we saw at the end of the quarter. So the tech stocks are taking a little bit of a breather. I think you're going to start to see it broaden out. We have seen the market broaden out, but I think the real key is going to be, what do the earnings bring us? And I've seen a couple of warning signs that I don't love, and that is Microsoft last week and Progress Software today, which beat on the top line, the bottom line, raised guidance, and the stock still got hit. And so these are the kind of things that make me a little nervous going into earnings season. And I do think
the market's broadening out. And the Wall Street Journal yesterday in the second section had an article saying, oh, now the market is broadening out. People are choosing more than just mega cap tech. I don't think so. When you look at the big winners of the second quarter, I mean, Palantir, Coinbase, some of these very hot sort of names that are very much momentum plays, and Nvidia, et cetera. So where is the broadening out? Materials are best performers today, at least.
Well, yes, that hasn't happened by any means. When we broke down the second quarter by performance, the growth portion of the S&P 500, SGX, which moves in lockstep with NDX, the NASDAQ 100, was up about 17%. I don't have the numbers in front of me exactly. SPX was up about 10%. The SVX, the value portion of the S&P, was up like 1%. So it's been so top-heavy into growth, so top-heavy into tech. The question now is, can they sustain it once earnings start to come out next week, or has too much been priced into these companies?
Earnings starting next week, everybody. OMG, we're going to be all over that. Steve, good to see you.
Thanks,
Thank you very much.